Hey everyone, this is Rob Roy, and welcome to the Elliott Elite U.S. Market Update. Well, the economic news in the U.S. markets this week was certainly dominated by all the trade tariff news and whether or not we're going to slow down the global economy with these trade tariffs that the Trump administration in the U.S. is enacting. And my personal opinion, just for whatever that's worth, is that neither the Trump administration or the U.S. wants to really enact these trade tariffs. What they want is to create better agreements, more free trade, fair agreements, if you will, with our trading partners, because we've been stuck in these agreements that are not fair. They're not equal as far as other countries charging tariffs on our goods coming in, and we're not reciprocating. We're not doing the same thing, and so they just want free trade. Whether or not we'll actually get that or not, I don't know, but I just think that this is something that the Trump administration is using as a bargaining tool, negotiating tactic, whatever you want to call it, but I don't think they really want to enact these tariffs. But it certainly gave all the financial networks a lot of fodder to talk about. Oh, look, we had a pullback during the week. Maybe this tariff stuff is going to be the end of the rally that has begun back since the beginning of April, and the markets are getting ready to roll over. Well, I don't see that. I don't see that the markets are rolling over, at least not yet, because when we add the Elliott wave on, you can see that we had a B wave correction, which was expected. We had this A wave impulse move, and so you get a normal B wave corrections, exactly what we thought was going to happen. We talked about last week this corrective move here, right on the 38.2% corrective level, and then we put the extension on, and that took us right to where the A wave impulse ended at the 61.8% level, and now we've pulled back, and we've pulled back all the way to the 38.2% extension level. That's all normal. Now watch this. I'm going to take this off and add the next fib retracement for that move. So this last, the impulse A and the correction, and you'll see that we're right there at 38.2% again. So we've had a corrective pullback. That's why it's labeled with the B. Everything is exactly as Elliott Wave is forecasted to be. And another neat little tidbit to look at here is, it's not a very big one, but we have a little bit of a triangle here, which means we have a complex B wave correction. So what does that mean? Well, it means that we're getting ready to have a little bit of a breakout here. Now, the Elliott wave pattern would suggest that we could very likely have the upside breakout and complete the C wave up to that next 61.8% extension. However, I do want to caution you and highlight the fact that when we have these triangles, they can break either direction. Don't get caught in trying to pick a direction with them. Respect the fact that when you see a triangle, it could break either way. Now, when we had this pullback and this little corrective triangle, you would expect volume to dry up a little bit. That's normal when you have a corrective time period. And when we look at the volume chart, remember again that that red line is the 200-day moving average for volume, and you can see that we've had pretty low volume, only one day of above average volume for the entire week. So that ties right into the fact that we've had this pullback and the correction. No heavy volume selling in this move down, so that doesn't fall in line with what a lot of the pundits have been saying, that the market's getting ready to roll over. If the market was getting ready to roll over, the volume should have been higher. We take a look at the VIX, and we've been talking about the 10 level of support and 15 as resistance ever since we broke back below 15 here in May. And note where we went, right on the pullback, right to the 15 level and back down again. So Friday we pulled back down from the 15 level, and if we do get the upside breakout from this little triangle and the completion of the C wave, the VIX will probably head back down a little bit lower, maybe down towards that 12 level, which is acting as a little bit more support than 10 here over the last couple of months. Now, if we do break above 15, again, I said this before, but I like to keep driving this point home, is if you break a major point of support or resistance, moving average, etc., it takes how many days? 2 days. 1 day of breaking above or below support or resistance is meaningless. You have to have the second day, the follow through or confirmation day. But as of this point, we haven't had any of them. We just hit the normal point of resistance and fell back down. Taking a look at the dollar, you can see that the upward Elliott wave move, the wave 5 pattern, the major wave 5 directional pattern, stays in place as we head up towards that wave 5 target. I do prefer the wave 4s to correct to 38.2%. That's my personal preference due to my research of Elliott himself, but the Elliott wave pattern is labeled based on the fib levels, and that's what we respect. Just rather see the wave 4s that pull back to the 38.2% level, but we are in this upward move in the wave 5 pattern and heading up towards that eventual target, and it goes a line if those of you that are really big into fundamentals. Federal Reserve just raised rates. We're not going to be cutting rates anytime soon, it doesn't look like, and the dollar should continue to be supported. Taking a look at TNX, look at this triangle that we have here. So we have the wave 5 extension, a big triangle there, very normal after a wave 5 is completed to have a triangle. And remember, we still have this big zigzag pattern back here that we've been talking about for quite a while. So the A, B, and C, and that should complete up around the 32 level at some point in time. Maybe this triangle is starting to tell us that we're about to break that way, but what did we just talk about? You don't pick a direction when you have a triangle. You could break up or you could break down. So we may break to the downside out of this and not complete that other zigzag, but we did complete the wave 5 pattern and went into a consolidating triangle. Textbook Elliott wave stuff happens all the time, and things that are good to look for. Looking at our case studies with Union Pacific, we've been in this for a while, in this wave 3, a little bit of a pullback, again not to the 38.2% level, but still in the upward trend, moving towards that wave 5. So this case study continues to work. And again, remember, we were earlier in the wave 3. These two are a little bit older, Union Pacific and Express Scripts. We talked about this line last week being an area of support resistance. We gapped above it. We had a huge gap up. We've come back and filled that gap. Now we're at that level to test that support resistance level, and that should give it the impetus to move back to the upside if indeed that it wants to continue its move. But remember, we looked at this back when we had this resistance level and said if it could get above it, then we could have something significant. But as soon as it broke above it, it did have that big gap up. You don't like the gaps because they got to get filled, and we'll spend a whole session on that at some point in time. But we came down, we filled the gap, and now we're likely ready to continue back to the upside. But that's been working as well. And then the two new ones that we added last week, MPWR, that wave 3 to the upside continues that we showed last week. Now we did have a move down on Friday, but before we finished lower on the day, we made a new high. So the wave 3 relabeled to the new high. So that wave 3 uptrend is intact. Now look at this. Look at this chart, and wait till I show you the next one on Texas Roadhouse as well. Remembering what the market itself did during the week. The market itself came back into that B wave correction, but yet the two positions that we showed, this MPWR continued its wave 3, bucking the trend of the general market, and look at Texas Roadhouse vertically to the upside. Last week we had 103% extension in the wave 5. Now we're up to 127%, and it's gone a little bit vertical, which I like to see the 45-degree angles better because maybe we get a little bit of a pullback. But when you look at the wave 5 at 100% extension, you're thinking, well, that could be a major point of resistance. 100% extension is normally a major point of resistance. And why did we look at this and say that we felt like that would continue higher? Because of our supporting indicator, the DMI. Remember, we had the green line with good separation from the red line. The green line is the positive directional indicator. That's buying pressure. The red line is the negative directional indicator, which is selling pressure. And we had the ADX, which measures the strength of the trend. It doesn't forecast direction. It forecasts the strength of the trend. Was moving up, saying that that trend was gaining strength. So even though we were at the 100% extension, the DMI was confirming that that wave 5 would likely continue, move past the 100%. It's exactly what happened. So both of these two powered higher when the market was correcting. So it went against the grain. And you know that we showed you these last week. Remember, we're doing things in real time. We're giving you these case studies and showing you these examples of the power of these tools, Profit Source and Integrated Investor. And all I did was program in my system into the search, and it gave us those results. Simple as that. Boom, I hit a button and it gave us the results. And that's the power of this, is to be able to create your own systems. And you've heard me say this so many times that if I was forced to only use one technical indicator, it would be Elliott wave. But it's prudent, and it's proven to be more successful, at least in my experience, to create a trading system. So you have some supporting technical indicators to go along with the Elliott wave, and that's what can create a successful trading system. But boy, there was no greater example of it than this past week, with both MPWR and Texas Roadhouse both bucking the trend of the market and continuing their moves to the upside. So it's going to be interesting this week to see what happens, because we have the little triangle there with the market itself, and we have the interest rates with their large triangle. We've got our case studies that we're following, but as has been over the past several months, the forecast from the Elliott wave and the charts has been really spot on. Hope you had a wonderful week. It'll be interesting to come back and talk to you next week and see how things look from that point. Take care, everybody.